Alright, so check this out. High yield savings accounts have easily become one of the most popular financial products over the last few years, and honestly, it's for a very good reason. They're one of the simplest ways to earn more interest on your money while still keeping your savings accessible and making your cash work a little bit harder for you. But I do have to be honest, and that's that while these accounts do get recommended all the time, there still are a few things that don't get talked about nearly enough. Questions like, when does it make sense to actually use one? How do they actually work? And what really are they designed to actually do in the first place? So in today's video, I want to talk about just that. I want to break down the truth about high yield savings accounts, how they work, and why exactly you should have one, and also how I think they personally fit into a solid financial plan. What's up, y'all? My name is Ruben, and this is Eternal Assets, where I'll talk any and everything financial literacy. And over the past few years, I've used high yield savings accounts myself for things like emergency savings, short-term financial goals, and after seeing so much information about them circulating online, I think there's a lot of confusion about what these accounts are actually meant to do. So first off, let's start with the basics, right? What even is a high yield savings account? Well, it's actually exactly what it sounds like. It's a savings account that pays a much higher interest rate than what many traditional banks tend to offer. So think about it this way. If your money is sitting inside a regular savings account earning basically nothing, your bank is still using that money. If you ever logged into your online banking app on your phone and on your savings account you see something that says like interest deposit or interest credit, that's not just the bank giving you free money. But what's happening is that they're giving you interest on your money because they're lending it out, they're investing it, they're generating revenue from it, and they're using it for different purposes. So a high yield savings account simply gives you a larger share of that interest that's getting deposited into your account. And the best part by far is that your money is still staying accessible. You're not locking it away for years, and you're not exposing it to the stock market volatility. And in most cases, your deposits are still protected by the FDIC, insured up to certain amounts. So at the end of the day, it's still a savings account, but the difference is that it pays you way more for simply just keeping your money in that different account. Now let's talk about why so many people have been recommending these accounts, and let's use a realistic example to give you an idea. So say you have around $5,000 sitting in a traditional savings account at a bank like Chase. Right now, Chase's standard savings account is paying around 0.01% APY. So if you have $5,000 sitting in that account for an entire year, you'd earn roughly 50 cents in interest. Not $50, not $5, yes, about 50 cents. Now let's compare those numbers to a high yield savings account. So for example, at the time that I'm recording this video, SoFi's high yield savings account is advertising up to around a 3.80% APY once you meet certain account requirements. So with that same $5,000 sitting in that account, you earn just about $190 over the course of a year. So we're talking about a difference between earning around 50 cents versus earning around $190 on the exact same amount of money. Now mind you, you didn't have to work any extra hours, you didn't have to learn how to invest, and you didn't have to learn how to pick different stocks. You simply moved your money from one savings account into a different one that's paying a much higher interest rate. And that's exactly why these accounts have become so popular, and that's because it's one of the easiest ways to make your savings work a little bit harder for you without taking on too much additional risk. One thing that is worth mentioning is that many high yield savings accounts do have certain requirements that are tied to the highest advertised APY. So for example, that SoFi account that we just talked about earlier requires things like an eligible direct deposit and having a checking account along with the savings in order to have the highest rate APY available. And that's why it's always important to have a good idea and look behind the headline APY and understand exactly what you'll need to qualify for the highest rate. And so if you were to ask me, there are two situations where these accounts make the most sense. The first one is going to be an emergency fund. So let's say your transmission goes out tomorrow, maybe your HVAC system breaks down, or maybe an unexpected medical expense pops up. Life has a very funny way of throwing expenses at us when we least expect them, and the last thing you want to happen is to be forced to sell some of your investments that you may have in the stock market during a downturn because you suddenly need the cash. And also, while it is sitting there to the side, you don't want it just sitting stagnant and earning pennies or 50 cents each and every single month. But instead, a high yield savings account gives you a place to keep that money available while it's still earning much more interest than it would be in a regular savings account. Now, the second situation that I think it's really good to have one of these accounts, and that's going to be short-term saving goals. So maybe you're saving for a move, maybe you're planning a vacation, or maybe you're just saving for your next vehicle. In situations just like these, stability is what matters the most, because if you know that you'll need that money relatively soon, keeping it accessible is way more important than trying to maximize every last dollar of return. For example, let's say you're planning on buying a new car within the next year or the next 2 years. If that money is sitting in a high yield savings account, it's still earning interest while remaining available for whenever you're ready to make that purchase. On the other hand, if you invested that money into the stock market and the market just so happened to drop right before you needed it, you could be forced to sell at a loss simply because the timing just wasn't on your side. The same idea applies to moving expenses, vacations, or any other major purchase that you know is coming up in the near future. A high yield savings account gives you a place to keep that money safe, available, and still earning interest while you wait to make it. That's exactly why I don't look at high yield savings accounts as a replacement for investing. Instead, I look at them as a tool for my money to have a job while it's sitting there and I'm planning to use it in the near future. Alright, so one thing that I noticed that doesn't get mentioned nearly as often is that interest that you earn from high yield savings accounts also is generally taxable. Now, before anybody panics, this is not a huge deal and it's definitely not something or a reason to avoid opening up one of these accounts. In fact, I'd much rather earn interest and pay taxes on it rather than earn no interest at all for keeping my money in a regular savings account. It basically works like this. If your money is earning interest throughout the year, that interest is generally considered to be taxable income. And once you earn $10 or more in interest throughout one given year, your bank is typically going to be required to send you a tax form that's called a 1099 INT. This is a form that simply shows how much interest that you earned throughout the year, and it's used when you file your taxes. For most people, this isn't really complicated and it's not some giant stack of paperwork that you need to worry about. It's usually just one simple form in addition and alongside the ones that you already receive. So when tax season does come around, you'll simply need to use this form to report the interest income that you earned throughout the year. The important thing is just knowing that it's coming so you're not caught completely off guard when you do see it in your mailbox or when you see it on your online account. And again, this isn't something that you should be afraid of. It's simply something that you should be aware of. And at the end of the day, earning enough interest to receive a 1099 INT is a good thing because it means that your money was actually working for you instead of just sitting in an account doing absolutely nothing. All right, so moving on, another thing that's worth understanding is that these interest rates that are on these accounts aren't permanent. Banks can raise them and banks can also lower them, and that's completely normal. A big reason that has to do with this is because of the Federal Reserve, or often called the Fed. The Fed basically helps to influence interest rates throughout the economy throughout the year. When the Fed raises interest rates, banks can often afford to pay a much higher APY on their savings accounts. And on the flip side, when the Fed lowers interest rates, banks will lower their APY on the savings accounts that they're offering as well. So if your account is paying something like 3.30% APY today, that doesn't necessarily mean that they'll be paying that same 3.30 forever. And this is exactly why I tell people that I work with to not get too attached to any specific rate. The account itself might be still good though, even though the APY changes over time. Because of that, I would not spend weeks chasing whichever bank is paying the absolute highest APY at any given moment. The difference between 3.30% and 3.40% is probably not going to determine whether or not you become wealthy. I focus more on finding a bank that you trust, one that has a good user experience, and one with features that fit your specific needs. The APY does matter and it's important, but it's not the only thing that matters. Now for me, a high yield savings account serves a very specific purpose. Typically, my emergency fund is going to sit there as well as money that I have for any short-term savings goals that I'm planning for. My goal with the high yield savings account has never been to get rich, but instead, it's always been the perfect place for me to keep my money that I may need while still earning interest on it. Now, money that I'm investing for the long term is a completely different conversation because I view saving and investing as two separate tools. One is for stability while the other one is for growth. And once you understand the distinction between those two things, deciding where your money belongs becomes a whole lot easier. Now, if you remember one thing from this video, let it be this. High yield savings accounts are one of the easiest financial wins available today. They can help your emergency fund earn more, they can help your short-term savings grow, and they can put your money to work without you having to take on any high levels of risk. Just remember what they're exactly designed to do. They're built for saving and not necessarily to build long-term wealth. And if you use them for the right purpose, they become such a valuable financial tool. Now, if you enjoyed this video, please make sure to hit the like button because it really does help out the channel. And if you want more videos on saving, investing, credit cards, and overall just financial literacy, consider subscribing as well. Thanks for watching. I'll see you guys in the next one. Peace.